Welcome, and thank you for joining us for today's discussion, The Future of Underwriting, Balancing Automation and Expertise, sponsored by Xceedance. I'm Laura Roy with Carrier Management, and we're so glad that you're here. Let's meet our speakers for today. First, we have Vikas Acharya, CEO of ChainThat. ChainThat's InsurTech platforms help insurance organizations unlock agility and reach their full potential. Next, we're joined by Mike Cavanagh, CIO at Fusion. Fusion is an MGA specializing in cyber insurance and has been a leading authority in cybersecurity for over a decade. And finally, we have Michael Parcelli, SVP and Client Partner for MGAs, Programs and Brokerages at Xceedance, today's webinar sponsor. Xceedance empowers global insurance organizations with strategic operational support, innovative technology, and data-driven services. So let's get started. I'll ask a few questions along the way, but we're really here to hear from our experts. So without further delay, Michael, in your experience, what are the biggest challenges facing underwriters today?
Thank you, Laura. The primary objective for underwriters is primarily profitable growth, or they can be opposing forces. So the key to achieving equilibrium between the two is most important. While automation and expertise provide a path for profitable growth, it's the enabling technology, specifically generative AI, that will play a critical role in achieving large-scale results. Additionally, I'd say that there's no doubt the underwriters are the subject matter expert in the balance between expertise and automation. However, they spend way too much time, nearly 80% on analysis, and they should be allocating that effort on decision-making. Therefore, enabling technologies will need to assume the analytical processing and decision support that will be provisioned through artificial intelligence. This creates a requirement for an InsurTech specialist. Vikas, would you agree with that?
Yeah, spot on. I think I agree with Michael's assessment here. What we're seeing here is there's a lot of partnerships with InsurTechs that is offering a clear pathway to accelerate adoption of technology. Insurance organizations sometimes feel that they need to build everything from scratch, but they don't need to. They can leverage the partnerships with existing solutions. And we have the cases like automated data collection, standardized submission process, provide real-time analytics. These are some examples, but this allows underwriters to focus what they do the best, which is applying their expertise to complex risk decisions. But looking ahead, we see the underwriter's role evolving into more strategic risk advisor, and robust technology tools can handle some administration tasks and overheads. I feel that there's even though there's a technology, it looks like it's difficult to adopt and all that, but there are opportunities and avenues to make that happen. I'd like to hear from Mike Cavanagh. How do you see underwriting change in the future?
So from an underwriting perspective, the traditional, the underwriting we've been doing for 300 years doesn't necessarily apply to what we're doing in cyber, right? We need to embrace more automation. We need to embrace alternative data sources. That's really what we're trying to do at Fusion. We are rebuilding the underwriting algorithms with the technology and those services in mind, which doesn't sound like that big of a deal, but in reality, it means starting from scratch every single time. Every time you build a new product. By creating that infrastructure, by thinking about everything from, the way the underwriting guidelines need to be built into the policy admin system to the questions and, the code structure that we use within the rater, all of that. We have to contemplate that. And that's the processes from the underwriting. When it comes to what's good, what's bad, what it will generate underwriting profit, for cyber, we need to, reach out and kind of assess alternative sources of data like, vulnerability scans. Instantaneous evaluation of security so that we can bring that into the underwriting algorithm. That's something that's important to us because we want to make sure that when we build these products and these algorithms and the policy admin system, everything, it can account for what we need to change in the future. We need to have more control ourselves. We need to be able to change what that function is, what type of information is pertinent to the underwriting, really creating that product. It's important and kind of building that from scratch and thinking about all aspects of underwriting, distribution, technology, everything is really the only way that we can do this successfully. And kind of, especially as a smaller startup, we're not the incumbent. Getting into that space, it's important to think about all that ahead of time. So it's painstaking. but it's important to ensuring that we can function efficiently, generate, underwriting profitability, and it's quite a grind, but it's worth it in the end.
Thanks, everyone. Great start. So the question is, are these changes actually happening in the market? What's the real appetite for change out there? How quickly is it happening, and what's driving it? Michael, let's go to you first.
Yeah, great question, Laura. I think there are changes occurring in the market. However, the appetite is different by segment. And I mean by saying that I believe carriers are a little more cautiously optimistic. However, MGAs and program administrators, like Mike indicated earlier, are approaching transformation more assertively since they are more reliant on the demand for human expertise and technology resources to grow their book. Additionally, I think decision makers are more accustomed to leveraging enabling technologies, so there are fewer issues on adoption or change management with regard to that. Technology is viewed as a competitive advantage, and I think just more so in the MGA program segment over the insurance carriers. They're more adept and a little more agile about moving forward, and there's a tremendous need to do that. And we work with many companies, throughout this value chain. We're all talking about the tipping point for the adoption of these technologies. As a result, the adoption is in fact increasing. Is this something that you're seeing as well, Vikas?
Yeah, Mike, yes, the pace of innovation I see is never like than before. We're seeing significant momentum in the market, particularly around the data capabilities. We have insurtechs innovating in automatic data extraction, real-time risk scoring, predictive analytics, and whatnot. But these improvements are not only allowing underwriters to make decisions in a timely manner, but also sets them up in their growth trajectory. For example, we're seeing trends where the traditional underwriting data is augmented with external sources like satellite imagery, IoT sensors, the water leak detection, pay per mile real-time rating in auto and trucks, social media sentiment analysis to create more complete holistic risk profile. And everything is API driven, right? So you have an ecosystem integration that allows us to have the data securely, and all of these pretty quick to get it up and running in terms of the overall value proposition to the insurer. We see the new MGAs and the new carriers or any existing carriers launching new products in days, not months and years that happened before. One of the key reasons that happened is the technology enablers that allows the insurance companies to plug out and plug in components that allows them to focus on their key business and not spending a lot of time in launching and building the products for months and months. So the key goal here is technology is going towards insurance than insurance. If you can see, if you know where it's going, it's about how can I reduce risk? How can I proactively reduce risk of a given risk profile? Also, make sure that we improve the accuracy and consistency in the underwriting decision. Well, again, on the practical front, I would like to hear from Mike Cavanagh in Fusion. What are you seeing at Fusion, Mike? And would you agree that we're approaching a kind of a tipping point?
Yeah, change is required, right? I mean, now, personally, from a competitive perspective, I know that change is required. I hope my competitors don't realize that change is required because it gives us that edge for a little bit longer. But to my prior point, it just means thinking about things in a different way. Personally, I have a background in computer science. It requires a different thinking when you bring that to insurance. And that's what we're trying to bring to Fusion, to the table, with our background in cybersecurity, thinking about these products in a different way, becoming more not necessarily a risk management consultant, but contemplating, how can we help that insured? How can we help them turn that, that no into a yes on the application, right? How can we become more proactive in making these insureds, one, quotable for us, more profitable, and kind of create a longer term relationship, right? At the end of the day, insurance is about making that business sticky. We want to retain that business. So it requires a shift in thinking so that we can, be involved and develop partnerships with the insureds, the brokers, the agents, the distribution partners, however, whether it's embedded or through the traditional value chain. Really how we can kind of stick in there and make that change. Our competitors aren't necessarily adopting that perspective. Some are, especially in the insurtech MGA space. Some of our competitors are taking a more proactive approach, but they've now become so large that they have the same problem as the incumbents, where they're not as nimble, right? They're not as nimble. They're not able to make these changes because people have relied on the current infrastructure and the current workflow. So it's given us the opportunity to force that change and eventually force these other competitors to change themselves. So we embrace it. We see it as a competitive advantage. We want to make sure that we stay at that forefront and try and see the change that needs to happen. Then question behind the question, the next question, how we can adapt to that now. And that goes down to everything, like I said, program development and finding the right partners to work with that have a similar perspective. It's more, it's important to think about that in the future and who you work with considerably. So from our side, it's more about proactive risk management, proactive involvement with the insureds, and thinking about how we can set our processes up today for the future, where we need to be a little more nimble ourselves and not fall into the same trap as some of our competitors.
Thank you. So with all this talk of speedy tech adoption, is there a risk of going too far too fast? Because as the leader of an insurtech business, what's your take?
Thanks, Laura. I think that's a very interesting question and very important question that you've raised. I'm glad you raised it. Now, while I lead an insurtech company and I'm naturally enthusiastic about technology potential, that's my background. But we need to be clear-eyed about implementation. The insurance industry has seen its share of hype cycles of technology, the excitement, and the technology runs ahead of practical implementations. We've seen that before. Now, what's interesting about the current technological trend, let's say, take an example of Gen AI and the automation wave that's coming, we're actually seeing a more mature approach from the industry. This is different from what it was before. Companies have learned from the previous technology rollouts that rushing implementation without proper foundations can create problems that it solves. We are in what I call a realistic implementation phase of the hype cycle, which is we passed the initial excitement and we're well into the practical challenges and understanding. Now, to that intent, the compliance and regulatory considerations become absolute critical now, especially in our let's say a global insurance environment. Take global programs where we have each jurisdictional locations have their own regulatory needs, data protection laws, reporting standards. Any technology solution needs to abide by these governing laws on the country there, especially with the insurance is spanned with multi-risk. It's not just about bolting compliance as an afterthought. But here's the difference. Here's what I see: technology becomes a part of the solution than a problem. Now, modern platforms can actually embed these compliance checks and regulatory checks directly into the workflows. So, for instance, systems can automatically flag transactions that may trigger regulatory reporting need in a different jurisdiction. It can automatically ensure data handling complies with local privacy laws. It can get an intervention flagged from a data protection officer or a chief underwriting officer to have a look at this. It's not an afterthought. It's built into your core process, and technology is best to do that. While there's certainly a risk of getting carried away, but we have a real promise of new technology trying to find an answer in the sophisticated implementation. The key is to approach it systematically with compliance and governance built around the foundation. This way, technology becomes an enabler for better compliance rather than a potential risk factor. Again, I'd like to get Michael's view. Mike, would you agree?
Yes, Vikas, I would. I strongly believe that you need to understand your business requirements and map the technology capabilities to support those requirements. I like to take a very pragmatic and simplified approach to problem solving and keeping your expectations reasonable. So you don't want to over-engineer a solution, and you want to ensure that not every problem has a technology solution. The expertise in this function that we've been talking about today is critically important. It's very important to have the human involved and have your underwriters be working through this entire process. At the very least, oversight, more so even deeply involved in it. So I think that there is a premise that you have to ensure that you're not moving too quick, but you also want to make sure that you set practical expectations about what the technology is intended to do, and then how it will benefit the process, and how it'll enable profitable growth as a function. I think, as I mentioned, adoption and change management for the NJ segment is particularly exciting because there is a desire to move forward with these tools and enable the underwriters to be more productive and more efficient in the way that they go about their process. The risk at hand is really over engineering or expecting the technology to replace the underwriter or to do more so than the underwriter really needs to be involved with. And I think that if you overcommit the technology, you're going to have disastrous results. And at the very least, you're not going to get the return on investment that you intend to get those things. How are you addressing this adoption risk, Mike, at Fusion?
So, I mean, at the end of the day, we're an InsurTech MGA, which means we need to account for the insure and the tech. We can't take the full tech approach and move fast and break things at the end because insurance is an old industry. Change in insurance takes a long time. It's my prior point. Like, we hope our competitors, they're not as nimble. They don't adapt as easily. But at the end of the day, my capacity providers, the reinsurers that I work with, are still traditional insurers. They're reinsurers. So we have to gatekeep ourselves on some of the changes that we want to make. Whenever I build a product, I build in a lot of things that are unique, a lot of things that I want to see personally, but it doesn't mean I activate everything on day one. It means that when I talk to those reinsurers, I explain both the short-term and the long-term plan because they want to see that underwriter is there. They want to see that there's additional eyes looking at it. Now we can, pre-underwrite the submission. We can use the basic information. We can work with people to come up with some sort of preliminary rate, a decline, a quote, whatever. But at the end of the day, especially above certain thresholds, we want to see an underwriter. We want to see eyes on that. Somebody that has experience from, what are the ramifications of this class of business on the profitability of the book. We can set all kinds of triggers and flags and this, that, and the other. But gaining the experience of some of these underwriters who may have worked in the industry for 5, 10, 15 years. I mean, cyber is relatively new. So there really hasn't been many people working in it that long, that focused. But by bringing in that different background, that almost diversity of thought within the insurance industry itself has helped us drive this industry, this portion of the industry, I should say, with cyber liability. So to discount that is almost to the detriment of our company, right? We need to be deliberate in how we make these decisions. We need to, I always preach measured growth to my capacity providers, to my reinsurers, so that they know that, it'd be great if we could write $100 million in year one. That'd be awesome. But I can guarantee you that that's not all going to be profitable business. It won't be responsible underwriting. We'll be loading up a book with, things just for the sake of writing. That's not the approach we want to take. We want to take that slow approach. We want to embrace change. We want to make sure that we are driving some sort of innovation. We are innovating ourselves, but we need to realize that the changes that we do need to make and the ones that we bring to market, to our insureds, to the distribution partners are deliberate. That they make sense, right? I mean, bringing our insurance agents, most of which are that they don't come from a tech background. They don't understand InsurTech. They just want insurance. Making sure that we have that experience to meet them where they need to be met, where they're used to doing it, and kind of slowly bringing them along through education and experience is important for us. So, I mean, the ultimate goal, we want to grow. We want to grow quickly. It just depends on what your definition of quickly is. And depending on who I talk to, whether it's an investor or a reinsurer, that definition might change. But at the end of the day, it's important to think about all these things ahead of time so that you don't, take on too much capital. You don't grow the team too quickly. You don't embrace automation to the detriment of true underwriting, right? This is a relationship business at the end of the day. So you need to account for all that. And it's not easy to do that. It requires a lot of internal gatekeeping, as I said, and that's everything. Even though I can get things done, doesn't necessarily mean, or get things done in a different fashion, embracing technology. To Michael's point, it doesn't necessarily mean that we need to, use technology to solve every problem. It's important to do that, and important to work with people that, build systems themselves that allow us to interject human experience in there, human understanding, and how we can change things. It's very important. So it's something that we battle with on a daily basis because we get excited about innovating. We get excited about changing it, increasing our competitiveness from how we make things easier. But at the end of the day, I still need to look and see a title agent and realize the title agents aren't necessarily the greatest risk in the world. So we need to do this. I need to do that. I don't necessarily want to write it, even though we got approval. It's a daily struggle for us as a company. And then, anybody really getting in that SureTech space, kind of contemplating that and making sure that every decision you make is, driving that innovation, but not recklessly, not innovation for the sake of innovation, not change for the sake of change. We want to make sure that those decisions actually lead us to where we want to go.
Great points, Mike. Really, thank you. We are nearing the end of our time, everyone. But before we wrap up, are there any final thoughts on finding the right balance between automation and expertise? Mike, let's start again with you.
With my prior point, it's important to really kind of find that balance. It requires bringing in every stakeholder that we have, getting that perspective. That means even bringing in the engineers. The first time I had to put together underwriting guidelines and then essentially translate those for engineers was an eye-opening experience. We build these guidelines understanding or thinking that some underwriters are going to look at that and be able to say, all right, well, they meant this, they meant that. But when you're talking to an engineer who needs to translate that into code, it does not work like that in any form or fashion. It means contemplating everything from when I say, less than 5 pets on the policy. Not that we write pet insurance, but less than 5 pets on the policy. The engineer is going to ask, well, do you mean less than 5 or less than or equal to 5? Little changes like that are important. So bringing in that expertise when I build these guidelines, when I think about the engineers in mind, when I kind of bring it full circle, when we build the products with technology in mind, we need to think about that balance. And by having that involved in day one, right, day zero, when we're just doing even, brainstorming, we need to think about how we can, build the product, the processes, everything where it can be more, supported by technology, where we can leverage technology to support the systems and the process and make things easier for our customers while also involving that human expertise that people have developed over time. Right, like I said, there's not many people that have been writing cyber or underwriting cyber for that long. So bringing in their experience, bringing their understanding from prior or different types of coverage is important. And now we've got more and more younger people entering the industry, so we want to make sure that they can embrace this. It's really something that we struggle with on a daily basis, trying to make sure that we don't, like I said, embrace change for the sake of change. We want to make sure that we are doing it the right way. And, that could be everything from working with the right policy admin system that can find that combination when they built it themselves, building the products with the technology in mind, but also having those key points where an underwriter can get in there and make the decision. It's something, like I said, a struggle that we find every day. And it's something that, we have to keep paying attention to. And hopefully the marketplace adapts to that as well. I know I want us to keep the competitive edge, but I love insurance. I like to see the way the market can grow and how we can what we can do, how far we can take this type of change. It just requires everybody understanding that there's a time and a place for technology, and there's a time and a place for true, what we'll call traditional underwriting. And really kind of the way we take that next step is by combining those two and where it makes sense, and kind of keeping certain things in mind, like underwriting profitability, like innovation with distribution, all of that together. And it's not easy. It shouldn't be easy, right? It shouldn't be easy to make these type of changes to a 300-plus-year-old industry. So that's kind of where we stand. The future of that underwriting involves both. And it may not be the answer, some people on the InsurTech want to side or, see, and or people on the incumbent side want to see. But I think it's important for the industry to really progress. We need to find that balance and figure out how we can move forward together. Really, we kind of work with people like ChainThat. So just kind of bringing all that together is important.
Absolutely. Thank you. Good points. So Vikas, what about you for the final thoughts?
Yeah, no, thanks. Look, I think I'm going to take an entrepreneurial and a young MGA position around where I see this, just to give a different perspective. Most MGAs these days are positioning themselves as a tech MGA. Fusion is a great example. They are a great positioning in cyber world. There is two things here. One is there is a positioning as a tech MGA, initial tech on its own, which means that the technology that is underpinning their success should allow them to build technology components on top of the current technology. So its compounding effect of the technology helps them to position in the market as a leading tech MGA. And Fusion's a great example there, working with them. We are seeing the decision makers in the insurance organizations are getting younger and younger, and it's going to go. And we have actuarial universities having programming built into their curriculum. So what it is saying, it is telling everything is going towards, entrepreneurial thinking. Can I have faster speed to market? Can I have a lower operational cost, more granular? Can I be hands-on? Can I have a scalable operation? And this is being thought through end to end. And secondly, I see in the insurtech positioning, you see a digital first approach, cloud first approach. Now, this is not technology company talking, this is insurance company talking. So what is it saying? It's saying that technology is now embedded deep into the insurance organizations, positioning themselves as a tech. Insurance MGAs are talking API first architecture because they understand the leading cutting edge insurtech MGA, they understand connecting data from different data sources is a key way forward to build this ecosystem. They understand real-time risk assessment is doable with technologies today. The behavioral pricing models, the usage-based models using Gen AI and ML. So I see a entrepreneurial, exciting time for technology companies. Now, having said, we need to let underwriters do what they do the best, which is interpret and make decisions right. Now, data crunching and the administrative overhead should be heavy lifted by technology. They should trust the technology. They should trust the powered analytics that comes with it. They will be guided through the automated workflows with really integrated compliance frameworks. As we go into this journey, my last comment will be that the real race isn't about whether to adopt any technology or this technology or not. Yes, there's technology for a business sake. I totally get it. But if there is a technology which needs to be adopted, it's more about not whether it will be, it's about when it will be done. And if you want to move first with a significant advantage in terms of efficiency, accuracy, and ultimately, as Mike mentioned, profitability, this is the time to be on riding those technology waves. So that's my final comment. Back to you.
Thank you. Very good. Very good. So, Michael, your final words, final thoughts for us.
I'm extremely optimistic about this. As a former underwriter myself, I completely am immersed and excited about all the technology that will enable the underwriter. But with that said, I would also comment that we're building what amounts to an ecosystem, right? And the level and importance of the underwriter can't be understated. It's extremely important. What we talked about earlier on was the challenges and the goals are profitable growth. The technology doesn't have profitable growth goals. The underwriter has those goals. So it is a human business, and it does require handshake relationships. And to that extent, the technology should be supportive and enabling the underwriter to be more effective and efficient in their process by gathering and doing all the analytical functions and to some support around decision making. But in the end, the underwriter plays a critical and pivotal role in that. And I believe the technology that's in the forefront, in the immediate forefront, is very, very exciting and enabling to that end, and will make the underwriter's role and purpose that much more not only exciting but also easier to accomplish to that piece. There will be some hesitancy about the technology, as I think that the technology capabilities are promoted in such a way that they're overselling to some extent. But I think, again, as I mentioned earlier, make sure that you understand the requirements of what you need and the capabilities of what the technology will bring. And if there's clear understanding across those two, then you can build a synergy between the technology and the underwriter to make it supportive towards achieving those goals. So very bullish on the opportunities. I think these are brilliant technologies, and I look forward to take advantage of them in the future and going forward.
Thank you all. That was great. That was a great discussion. Thank you to our panelists for sharing your insights with us today, and to Xceedance for sponsoring the discussion. And of course, thank you for joining us. And if you'd like to learn more, please visit the company websites displayed on your screen, and be sure to watch for a follow-up email with details about how to watch this discussion on demand or share it with a colleague. So thanks again for tuning in. Have a wonderful rest of your day.